Now, as we're discussing about the structure of financial markets. After discussing the structure of market based on the instruments, now move on the structure of financial market based on the issues of security. When we say that based on issues of the security, so there are two types of markets: primary market and secondary market. So regarding the primary market, so a primary market is defined in a way that a primary market is a market where new issues of securities such as bonds and stocks are sold by the initial issuer, such as who are the issuers, such as firms or the government, selling to the first buyer or creditor who wishes to buy. So, however, these primary markets are not as well known as secondary market, and in fact, most trades are not done in this primary market. तो दिस इज द डेफिनेशन ऑफ प्राइमरी मार्केट। इसका मतलब है प्राइमरी मार्केट बुनियादी तौर पर ये वो मार्केट है कि जहां इब्तदाई तौर पर कोई कंपनी या गवर्नमेंट वो क्या करती है, वो अपनी सिक्योरिटीज बॉन्ड या सिक्योरिटीज को इशू करती है पहली दफा। तो पहली दफा जिस किया जाता है तो हम उसे कहते हैं ये प्राइमरी मार्केट है। एंड दिस प्राइमरी मार्केट इज नॉट वेल नोन, इसे ज्यादातर कोई नहीं जानता। क्यों? इसलिए कि भी ये आम पब्लिक के साथ इसकी डीलिंग नहीं हो रही होती। यहाँ कंपनीज और फर्म्स होती हैं और जो एक से एक साथ डील कर रही होती हैं। सो दैट इज व्हाई इट इज नॉट वेल नोन हियर। फर्स्ट इशूअर ऑफ द बॉन्ड इन sells to the direct investors, तो इसमें पब्लिक नहीं होती। सो दिस इज प्राइमरी मार्केट। इट इज नोन एज आल्सो दिस द प्रोसेस through which securities are issued to the investor first buyer. This is known as initial public offering, IPO. This is IPO is a term relevant to the primary market. So about the secondary market, if we ask a question that uh, why primary market is not well known, then the answer is that because most of the trades in the primary markets are done behind the closed doors, and mostly investment banks are main players in this primary market through underwriting securities by which the bank guarantee a price of a firm's security and then sells the securities to the public. Initially, investment banks, they provide guarantees, and because of those that guarantee, the firms who buy their security, they see that there is a guarantee of that bank, so that is why we have to purchase this security, because now it is secured, it is guaranteed by the some bank. So that is why, because it is just between the institutions, so that is why it is not well known. Okay, now move forward toward the secondary market. So secondary market actually is a market where securities are traded after they are initially offered in the primary market. First buyer bought it from the primary market, then if the first buyer needs money, needs cash, then he or she can sell those securities to other guys, to other parties. So when he will sell, where he will sell it in secondary market. And which types of secondary market are known as stock exchange, exchange market? So this is known as secondary market. So that is why we call it here, look at here, that here investors and traders buy and sell stock shares to each other. So first buyer sells, then the first buyers are investor, actually they sell to the businessmen, other traders. So the company does not participate in these transaction. Actually, the when company issues its bond or share in the primary market, then it then the first buyer pay money, pay capital to the company. So that capital is company takes that income. After that, the people sells those share on profit. That profit goes to the pockets of investors. that profit does not goes to the pocket of company. ये जो आप अक्सर सुनते हैं कि भाई आज स्टॉक मार्केट के अंदर फुला कंपनी के शेयर्स का रेट बढ़ गया, तो वो जो होता है वो इन्वेस्टर्स का प्रॉफिट होता है। कंपनी उस प्रॉफिट से अर्न नहीं करती, कंपनी को सिर्फ वही इनकम होती है जो वो प्राइमरी मार्केट में अपने जो शेयर फ्लोट करती है, तो वो उसी से ही जस्ट अर्न कर रही होती है। So this is the introduction of primary and the secondary market. So look at here. So this is primary market. These are the securities. Equity shares here float. Debt securities like bonds, CDs, government bonds, treasury bills, etc. And the derivatives, swaps, futures, forwards, etc. These are the conventional speculative documents. So all these documents initially offered into the primary market. So here you can see the primary and secondary market together. So this company, it issues share. This is the investor. He bought the shares and he paid money to the company. So this is primary market. So this is the primary market. After buying these shares, then this guy shared to the public, investors B, and that investor paid money to him. If the price the repo reputation of this company was good, then the prices of share increased into the market. Now who will earn the profit? This guy will earn the profit by selling that share on high price to this guy, and this guy will pay him. So this profit will not pass on to the company. No, this profit is for profit A, investor A. So this is secondary market and this is primary market. So this is the difference between primary and secondary market. So investment banks and banks are the main players in primary market through underwriting securities, by which the bank guarantee a price for a firm's security, then sells securities to the public. Why this guy is going to buy the share of this XYZ? Because he does not know this company. This guy knows investment bank. So this guy see that investment bank gives guarantee to this share. So now this guy says, oh, think that, okay, this is guaranteed. There is a no risk. It means that there is a no fraud in this company, because that investment bank has given the guarantee to this share. So it means this in this way, this primary and secondary market does work actually. Okay, so and in this primary and secondary market, there are two more terms, and those two terms are brokers and dealers, and we explain in the next part.